how much insurance to buy and what type to buy. There's so many different types of life insurance. How, once you know you're going to get some, how do you pick between the options? Hi, that's what we're going to talk today about on Friends Talk Financial Planning. Hi, I'm Bridget Sullivan Mermel, and I've got a fee-only financial planning practice in Chicago, Illinois.
And I'm John Shearer. I run a fee-only financial planning practice in Middleton, Wisconsin. And that's a really great question, isn't it, Bridget? Like there's so many options. We figured, okay, I need, and maybe think about a young family, right? Okay, we got
Right.
young kids. We know we need insurance. How do we go about buying it? It's confusing. The agents come in their spreadsheets and all these things, and it can be a whirlwind. Um, I know I've got some experience in that. I've from my days as an insurance agent.
Right.
Right? What do you tell people when they're thinking about that?
Well, first of all, I like people to get it. I did have an experience with a client who was in their 40s who ended up with a terminal, or what I thought was going to be a terminal illness. And I was so grateful that we had he had a lot of life insurance. When he was facing this issue, I was really happy about that. So I am a proponent of life insurance, and I am constantly telling people, especially parents with young kids, they need it. So, but I'm really interested in your expertise on this, John. So, tell me about what principles do you usually use when you're helping guiding people?
Yeah, there's sort of three basic things that I talk with people, and one of them is to own your own life insurance, own and control it. And what I mean by that is, many people have coverage through work, and that's great because it's usually pretty inexpensive.
Right.
But what you don't realize is that they can cancel that policy. Either your employer or the insurance company can drop that policy at any time. And of course, if you change jobs,
Right.
right, you have an issue. And what happens? I'm working for a company, I got really good insurance, and I find out I've got high blood pressure or diabetes or some other thing, and now I change jobs, and now I can't get coverage, or it costs me 10 times as much, right? So when you need the coverage, having it through an independent insurance company, not through your employer, is really critical. So that's one piece that people overlook pretty often.
Makes sense. Yeah.
The other thing is that there's all kinds of different types of policies, and many of them build up cash value. They've all got all kinds of fancy names:
Right.
cash value, whole life, universal life. It goes on and on. And what for 99% of people, what you want is term insurance. What it is, and what that means is you pay a premium, and if you die, your beneficiaries get paid. No investment, no other component. And the insurance agents and typically the payout for getting somebody to buy one of these cash value type plans might be 10 times, three times, four times, five times, 10 times what it is for the term insurance. So not only is the premium higher for those whole life type policies, the commission rate is significantly higher. So there's a lot of incentive to sell the whole life type things. And again, there are certain people, but it is a rare instance that makes sense. Uh,
Yeah.
and then
It's
the
very rare, and it
right,
seems like there's also this appeal. Like the insurance companies understand the feeling that people have about life insurance, that if they don't die, it was a waste of money.
right. You don't think
And
about
so
that with
they,
your car insurance. Oh, I didn't make a
yeah,
claim on my car insurance. It was a waste of money, right?
you don't think like with your home insurance. So that was a waste of money. I didn't,
Geez, my house didn't burn down. I wasted all that money, right? Yeah,
yeah, but and I think a lot of people must feel that way. So, so they have bundled it with like a savings element that they tweak to make it sound as good as possible. And it sounds as good as possible to the insurance agents too. So
right,
they sell
right.
this stuff.
Well,
But, it ends up most of the time not paying off for the person. That once they actually wake up and look into this policy, they realize, oh, I could have done a lot better if I just paid attention and skipped
that's
this
right,
and put money into a savings account or put money into the stock market
right.
instead of this cash balance policy or this universal or whole life policy.
That's right. But the thing that's different about life insurance versus the car and the home insurance is it's not a matter of if you're going to die, right? everybody right, unless you know something I don't know yet, right? Like this is going to happen, and that's what gets played on is, well, it's not if, it's when. So when you die, don't you want a benefit to get paid out because there's going to be expenses, and
Ah,
it's right.
it's
And so like it's not when my house is going to burn down or when my roof blows off or what, it's if.
right,
And so that's where it shifts the conversation. And that's, I mean, right, that's factually true. But what we want to ensure is not the when I die. What I want to ensure is if I die before I reach financial independence,
right,
that's the problem, right?
right,
And
exactly.
that's the place where we don't see that. And that's where the sales pitch, if you will, from the insurance side comes in. It's boy, yeah, it's a certainty that we're going to die, but we're ensuring the probability that something happens tomorrow and not in 50 years, right? So
Right.
that's the key difference in there. And so maybe just to be aware as people are talking with agents about that difference. And then the big one for me, so we've talked about make sure you own and control a big chunk of your own insurance. Get it through work if it's cheap, that's great, but have your own policy
Have some more. Yeah.
and have term insurance, right? That's most for almost everybody. And then the big one is like, okay, how much do I buy? And it's individual for everybody, so it's not like, hey, this is the recommendation and what you should do. And so you have to take a look at what your expenses are and what how much needs are and things. But I'll tell you that a good guideline to see, hey, am I at least in the ballpark, is something like 7 to 10, 7 to 12 times your annual income. If you're in that range, at least you're not super uninsured or super overinsured, right? Like you can't say like, oh yeah, there's a guideline you use it, but you kind of go, listen, if you've got 20 times your income, boy, I'm guessing you're probably overinsured when you look at those details. And if you've got less than 7 times, you've got 5 times or less, and you have a small family, like, oh, that's probably not enough coverage, right? So that's
Right.
a good kind of frame of reference to say when people first come in, I kind of look at that and say, oh yeah, I'm guessing we're going to have to do some work on their insurance, even though we look at it anyway. It's sort of the thumb in the wind way.
Right.
And when you break down and you go through and we go through our analysis, or you work with an insurance agent and they go through theirs, it's boy, it's a pretty reliable thing. Like that's and the older your family is, if we're talking about a family situation, the older the kids are, usually on the lower end of that, the younger the kids are on the higher end. And one thing I tell people is, I mean, the big thing, like the one takeaway that I give to my clients is make sure you have enough. You explained about your client, and boy, what a comforting feeling it is. And I tell people, $1 million sounds like a lot of money, and it is if you win the lottery. But if
Right.
you're raising 2 kids for the next 15 years, that's not very much money, right? And I've got a personal example. My grandparents, two of my grandfathers were both welders back in the 50s, and they both were at that time that was at the high level, new cars every few years, and actually my grandparents, my wife's grandparents, so similar situations, single one child each, and boy, my grandfather died at a young age. He was 57 and didn't have insurance, and my grandmother back in the 50s and 60s raising a child, was a little different scenario than it is
Yeah.
today. My wife's grandfather lived to an old age and continued to save and do things, and the lifestyle that my grandmother had when I knew her versus my wife's grandparents was night and day difference. And I look back on that and think, boy, if grandpa had enough insurance coverage to make sure that grandma didn't have to work and could do some of these things, could continue to do the savings they were doing, that sort of
Right.
stuff. It's just one of those things that's a rare occurrence, right? It doesn't happen very often, but you had the experience, and I've seen it,
Yeah.
and I've seen it play out. Like
Yeah.
that's not
Exactly.
the thing. You don't want to waste money on insurance. Don't waste money on paying for whole life, but make
Right.
sure you have enough. Err on the high side.
Right.
Nobody that
Exactly.
finds out they're sick that has ever said, "Geez, I'm really sorry I bought too much insurance." So that's the I guess the one big takeaway as we think to wrap this up is
Yeah.
make sure you get enough. Err on the high side
Right.
and keep it cheap with the term insurance.
Right.
So,
Great.
yeah,
So I really appreciate your insight in this and a great example. Sorry about your grandmas. Like,
yeah, yeah.
it
You see
really
it.
brings it home.
Yeah,
All right. So I'm Bridget Sullivan Mermel. And again, I've got my family financial planning practice in Chicago, Illinois. And this is John Shear. We're both members of ACP, or the Alliance of Comprehensive Planners, which is a group of like-minded family financial planners all around the country. And you can check out them at acplanners.org and subscribe It helps our credibility with YouTube. It helps other people find our channel. And you can just, if you don't want to be inundated, you can turn off notifications. And I think most people don't find that it's too uh, horrible to subscribe. I think we find that people generally like it. Anyway, so with that, let's wrap it up. Thanks, John.
All right. Thanks, Bridget.
Okay, bye-bye.
Right at 10 minutes.
Boy.